What's up, everyone? Welcome back to the Miss Teen Crypto Show. I'm your host, Randi Hipper, here today with an amazing guest. But right before we get into our guest, I want to say hello to everyone. Thank you guys for coming. Make sure you guys smash these likes, subscribe, share the stream out with friends so more people can learn about today's guest, eToro, and the future of digital finance, because this is why we are here, guys. We know everything's going digital, and we might as well hear from someone that has been in it from the start. So let's welcome our amazing guest, the CEO of eToro, Yoni. Welcome to the show. How are you?
Thank you very much. Pleasure being here.
I really love what you're doing, Yoni. From the start, you've been into finance for a really long time. I love what you guys are doing at eToro because obviously the future of finance is digital, and a lot of people are seeing that now. That's why cryptocurrency is really taking off nowadays, and obviously going to play a big part in the future. But I want to learn more about you, Yoni. I want to take a step back in the timeline of your life. Let's go back to 20-year-old, 18-year-old Yoni going to college. What did you think you were going to do with your life?
I actually fell in love in the stock markets and the internet very early on. So almost 30 years ago, when I was like 13, I started programming and trading very early on. And I loved also sort of what connects both the stock markets, the internet, and then later on blockchain. It's these digital organisms that enable connectivity between millions of people. And I remember my first stock trade, like I traded a stock on the NASDAQ, and then I saw, I think it was on Yahoo Finance back then. This is like 1996, maybe my first NASDAQ trade. I saw the price change because of my trade. And I was like, wow, I'm a teenager in my parents' basement trading, and I see how it changes the actual order book on NASDAQ. And the same before that was when I discovered the internet. And then later on, when I saw Bitcoin, was the same feeling. It's a system that really connects everybody. One is around information, the other one is around capital markets. And now we're in the era of real digital money.
You were into stocks at 13 years old. Where did you hear about the stock market? Why did you even care to get into the stock market?
So I was lucky enough to have a father who came in from the stock market. So my father was a founder and CEO of a company that's still listed on NASDAQ called Magic Software. And when we were kids, he would drive us back from like a restaurant, which is like Friday night, so Shabbat dinner, and we would stop. This was like early 90s. We would stop in front of the bank where you have actually a real physical ticker of prices. And because there wasn't almost no internet back then, and you wouldn't have the newspapers to figure out what's actually on the stock market when you got home, so we actually stood in the bank looking at the prices, and he would tell us, go and tell me what the price of my company is. So we got this education very early on in life, with a father who's a CEO of a public company, to sort of get it really engraved in how we grew up. And a lot of the dinners in my house always somehow surrounded capital markets and the stock markets. So it was easy for me to fall in love.
I mean, having that financial literacy at such a young age is super important. I mean, my dad introduced me to Bitcoin when I was 13, and if it wasn't for that, then I wouldn't probably be in finance at all because they don't teach you finance in school. You kind of were self-taught and your dad taught you, but you really continued to study. Did you, were you charting? Were you looking at charts? Were you really interested in that type of thing? Were you more just like watching the waves of like certain sectors in the market?
I was more interested in fundamentals.
Yeah.
So I started trading actually in the Israeli stock market, where I'm based. I then moved to the US stock market, and I think my first trade, which is funny enough because now when Nvidia is suddenly at $1 trillion, I remember that my first trade was AMD versus Intel. I used to look at the fundamentals of AMD and Intel, the revenue multiple and their profit multiple, and they said it doesn't make sense for one chip maker to be worth $100 billion and the other one to be worth, I don't know, $4 billion, and that at some point that gap has to close. And remember, that was my very first exciting trades in the markets. And
Wow.
I was always looking at sort of the fundamentals, like reading what the company does, more interested in, the revenues, how they're generating revenues, what the product art was, and less sort of a technical trader or a chartist. Later on, I did my first degree and second degree in computer sciences, and then I went into algo trading, trying to beat the markets through algo trading, through software, sort of realizing that, if you can automate what you're doing, maybe then you can more easily beat the markets. And when I think I was about 25, I started eToro with my older brother. So I was doing my master's in computer sciences, and he was doing his master's in the Royal College of Arts, so around design. And we started talking about the fact that we were so lucky to learn about the markets in our house, but that I think still, like, the opportunity is so big for retail investors, for newer generations, for Gen Yers, for Gen Zers, because, when I grew up, it cost $20 per ticket to buy a stock, and you didn't have fractional shares, and it took 2 weeks to open an account. Right now, you can open an account on eToro with like 5 minutes, download the mobile app, open the account, fund the account with PayPal, and buy a fractional share of Amazon or Tesla or Bitcoin. So I think we've enabled the simplicity of enabling access to everyone, and that really what got us excited when we started the company 16 years ago. We looked at where the markets are and who are the market participants. By the way, even more outside the US. So when you look at outside the US, retail investors in some cases represent like 5% of households, where in the US at peak it was 40 to 50%. So a lot of people outside the US don't trade the US capital markets or capital markets at all, because traditionally capital markets were very, very local, right? So people in Italy
Yes.
used to trade only the Italian stock markets, and even to trade the US stock markets would be even more expensive. You'd also have to pay for exchange, for the currency exchange fees. You still do in a lot of cases. So things got much, much cheaper and simpler in enabling access to the global markets. And our view was, this market needs to be open to hundreds of millions of customers, not single-digit millions of customers.
Accessibility is key. I 100% agree. I think, of course, I think finance itself kind of takes down a lot of geographical barriers, because a lot of people want to invest. They just don't have the opportunity to. So you had the opportunity to do that very young. So you kind of wanted to spread your wealth and spread your knowledge that way, which I think is really amazing. I mean, you were starting eToro in your 20s. So what happened through your financial journey from 13 to, let's say, 20 years old? You were getting your computer science degree. You were interested in the markets. You were interested in programming. How did this all kind of collide with you to kind of form eToro, form a platform?
So I was super interested in the stock markets, and as a teenager in a high school, and it was very hard to get friends of mine to actually talk to me about the markets, because the markets is like, I always said, like, I was a financial geek, right? So both the techie and into finance, you wouldn't find a lot of people to sort of talk, like right now we do, right? It's amazing the amount of people you can talk about inflation and what's happening in the markets and interest rates. Back then it was very hard. So I used to like crawl nonstop the internet, from BBSs to I think it was Raging Bull and Yahoo Finance groups, to find people that are interested about the markets. And back then, when I was in high school, I thought one day I'd work in like a Goldman Sachs or JP Morgan, surrounded by thousands of people around me who were on the phone talking to people in Japan and Hong Kong and Australia. So that was sort of my envisioning of what I would want to do. And then as I grew up and got more and more into technology and became a programmer in the army, I realized it's that intersection between technology and capital markets which really excites me. But I had some funny stories along, like when I was drafted to the army to be a programmer. But when you get drafted, you actually sort of, you wear the uniform, you walk with a machine gun on your back. And I was drafted in March 2000. So March 2000 is the beginning of the dot-com burst, right? So I grew up, like many people, get excited about the markets during a bubble, and then they either, I would say, they get educated about the markets during a bubble burst. And I remember calling my father from a payphone. Well, I sound so old in this spot. We're like calling from a payphone to my father, asking him, like, give me the quotes, give me what's happening in the markets, what are the quotes? And he said, do you have a gun on your back? And I'm like, yes. I said, so come back home and then we'll talk about it.
Wow, so he didn't even want to tell you what was going on because of how bad the markets were.
You focus on your service now.
Wow, so you got drafted as a programmer. That's really impressive. So how did, I know you said you saw the intersection between like capital, finance. How did you feel that people, like, did you feel like a lot of people understood what you were doing even when you were in the army? Because I relate to you. Like, I had nobody to talk to in my school. Nobody knew what cryptocurrency was. No one knew about finance at all. No one understood until just about recently, where everybody's just about impacted by the financial system. Did you feel like people understood you even then?
No, so again, it was very hard, which maybe is one of the reasons I love the internet, because on the internet, I did find people to talk to, right?
Yeah.
So it was easier on the internet than it is outside the internet. But when I think it was about 19, I did a course in basically, it's like a series 7 roughly in the US. So it's investment advice and portfolio management. And then I did, and that was during my army service. So I did that, and then I learned basically all about sort of the fundamentals of the business and on options trading, and I had to do the Israeli SEC exams to pass them. And during that process, so two funny stories. One is I actually wrote an options calculator. So like the hardest part on the Israeli SEC exam, this is like 20 years ago, 20 plus years ago, was calculating profit and loss of option strategies, which was a big part. So I actually wrote software based on what I learned to be a programmer. I wrote software where you could just sort of put in the values of a straddle or an option strategy, and you could see the value of that option strategy over time. This was like the first serious software I wrote. And then I actually I burned it on floppy disks and gave it away to people in my course and hoped to actually sell it at one point, but then never got into the point, right? So this is where you actually had to physically give somebody a floppy disk for you to give them software. And then later on, I actually joined the board. So my teacher, the person who taught me about capital markets when I was 19 in that course, was the founder of the second largest investment house in Israel called Zvi Stepak. And about 10 years ago, I actually joined their board. And they manage about $60 billion, roughly, publicly traded company in Israel. So that was like, for me, a full circle of starting to learn about the markets in his course and then actually becoming a board member of their company.
Wow, that's insane. So you were really progressing the market in such a different way than everybody else. I mean, you weren't just like looking at the financial side, you were just helping push the whole thing like technologically, which I think is really important and kind of brings you to like when you were starting eToro. I mean, when did you end your service in the army? And you kind of had like that free time, and then by the time you were around 26, you created eToro. What was that time like for you?
So in between, I managed to co-found another company
Oh
called
my
CD.
gosh.
And that company, actually, what we built is cameras on roller coasters, sending on Wi-Fi MP4 videos. So you would go to like a Paramount roller coaster, and we would stream from the roller coaster the entire ride, and burn it into a DVD. So you would go off the ride, you would see your video, then you would pick the video and buy the video. And then in my early 20s, I used to travel around the world in theme parks, actually installing that software. So the only thing I'd say is related between CD Right and eToro is capital markets are just like roller coasters. And other than that, the company was eventually sold to Kodak after I left the company, and I started eToro with my older brother.
Wow, you are just an innovator. Since you're 13, like it's just nonstop. And I really love the ingenuity. So you then co-founded, sold another company to Kodak, which is absolutely amazing. And I think everybody knows about that technology. I mean, that is very much like experience changing technology when you go to a theme park. Everybody has those pictures, the videos now, and that's absolutely amazing, except now that they can email it to you instead of putting it on the disc. But you starting that is absolutely amazing. And I know you were, you know, you're Gen Y. And I think Gen Y and Gen Z have some similarities in that we want to own our property. We really want to take control of our finance because we're in a digital age. A lot of things like information are a lot more accessible. So why shouldn't our finances be just as accessible? What was that coming from your side as Gen Y creating eToro, and how was eToro started?
So we really started from the point of view of user experience, right?
Mm-hmm.
Which also changed a lot over the past 16 years. Like I told you before, like you would be amazed that when we started eToro, there was a download desktop app. And as an entrepreneur, there wasn't cloud. So I had to actually install a server in my house that I would demo investors connecting to the internet to my house to show streaming prices. So the world advanced quite a bit from then, but it really started about accessibility and simplicity. So we said, we want to make buying stock as simple as buying a book on Amazon. And that was really a part of the initial pitch, is making finance simple. And we really started by iterating the user experience and figuring out how can we onboard customers more easily. It was really hard to just open accounts in brokerages back then. And then we figured out something interesting, which is, I think, like 2009, 10, which is a lot of our customers were on the chat. So when we launched the platform, we had this chat, and then we saw all of our customers asking sort of the same repeat questions, the same customers. They were asking them, what are you buying? What are you selling? What are you doing in your portfolio? And that's how we transitioned into becoming what we are today, which is the largest social investment platform. We have 30 million registered users, and all of our customers from all over the world can actually see what everybody's trading in the real accounts and talk to them, because we realized that it's not only about simplifying access, right? So first it was about hacking the user experience to make it extremely simple to buy assets over the internet. And then the real question was, okay, but how do we simplify the decision making? How do we help people understand what to buy and sell and when? And then when we saw Facebook and Twitter, this was early days of Facebook and Twitter, we were like, okay, let's let people just learn from one another. Let's not be, which is a very Gen Y thing, right? So I think
Yeah.
social networks are more Gen Y still. I hopefully Gen Z don't go out of social networks, but it's really about, I can learn from other people. So it's about the internet, right? I always say like Web 1, Web 2, Web 3. Web 1 is you just read static pages, right? So I got excited about Web 1. I could just read information, but mostly things were static. There were BBSs and groups and stuff like that. But then Web 2 really took the internet into social and mobile. It was suddenly you're interacting. You're used to interacting with everything. It's not some people, the small minority writes, and then the rest just read. It's people interact, right? They like, they share, they constantly communicate and learn from one another. And I think Web3 eventually is now connecting that with your money, right? Connecting it to financial transactions or to value, which I think is bigger than financial transactions. I think the ability of us transferring value to one another over the internet is bigger than finance, because values represent more than just finance. We're just after, a very long period of time where everything in finance tried to get translated into this very single dimension. Here's the Excel, here's the P&L, here's the dollar value. To us now, sort of reinventing a world where we can say, hey, this is valuable and I want to put a value on it and I want to transfer that value somehow overseas. I think we're really in the infancy of that concept, but I think it's eventually a huge concept that intersects with finance. And that's for me, Web3.
I agree. I do think that obviously the value transfer and the ease of just sending cross border payments instantly in a decentralized way where there's no barriers, people that can't afford to be banked or have accessibility, people that in countries where inflation is just too much, where they have to spend their money by Monday if they get paid on Friday because inflation is just so bad that their value is just diminishing literally minute by minute. And something like Bitcoin, as volatile as it may seem to someone in maybe a first world country, it's really not that volatile to somebody who, again, is losing their value day by day. And I feel like what you were saying, making things simple, making things accessible is absolutely key. I think that's what we're kind of still missing a little bit in crypto, but I think that comes with time. Like how you started all of these technologies, when you first started them, that was like the infancy into where eToro is now, where, like you said, it's a full on social network. But given that you were starting this in 2007, right around when Twitter and Facebook were launching, you were one of the first social platforms in terms of finance. I mean, I guess that ties back into when you were younger, say like when you were saying that you didn't have a lot of people to talk to. Well, now you could. Now a lot of people can have that open conversation. Do you think that helped spread financial adoption in general? I feel like it did.
100%. I think that's the most basic way humans learn, and now AI learns as well, but humans learn is through observing and interacting with one another, right? Yep. So I see it with my kids. Like that's the main thing of how they interact and learn how to interact and educate themselves. It's just about observing everybody else. And I think finance is the same. By the way, for a lot of people, it's just about actually believing that you can actually make money in the markets. Still, in many places around the world, there's this notion that you can't make money in the markets. There's a very big notion saying you can't beat the markets, just put all your money in an S&P ETF. I think sometimes like I compare it to like sports. Like, right, you can't all be Michael Jordan, but that doesn't mean you can't enjoy playing basketball and winning some games. So I'm a very big believer in the opportunity that the markets generate for retail investors. I am a very big believer that retail investors can and should make their own decisions and invest their own money in the markets, because eventually we spend all of our lives, working for money, and then we just take that money and give it away to somebody else that does with it something, and we're like, okay, now we're not interested where my money is anymore, right? But eventually, our money is voting, right? With most of our time of day spent in work making that money, and then we vote with that money through investing it. So if I believe in Apple and I invest in Apple because I believe in Apple and I like their products, then I'm investing in what I believe in. And historically, for me personally, investing in what I believe in was very successful as an investment strategy, because when I stop liking something and believing in something, because it's a product, right? Because it's a product I use and see other people use, and I feel suddenly something is wrong. So that's where, when I sell, I think that's a great way to invest your money, because you're also emotionally invested in the market.
I understand that. I think sticking to fundamentals are really key, because a lot of people can FUD things, like they FUD crypto and say crypto's horrible, crypto's this, crypto's that. But if you believed in Bitcoin, like how you believed in Bitcoin and crypto for quite a long time now, which we'll jump into your crypto journey, you would be doing fine. You would understand that Bitcoin is inevitable, that crypto is something that people need. People need to be their own bank. They need a better way to transfer value without a third party taking all these fees and controlling where it goes. How did you find Bitcoin and cryptocurrency? Where did that journey start for you?
So I actually started writing about virtual currencies in 2008. So two years before I discovered Bitcoin. And I still remember some of the people sort of I interacted with around this concept. So we started eToro, and then a year after, the global financial crisis started. And when the global financial crisis started, We were also trading currencies on eToro. And I saw something super, like, for me, it was astonishing. Like, I saw the markets sort of shut down, right? So the APIs of the banks sort of shut down, the spreads, right? The prices significantly increased. And that drove me mad. I was like, I'm a fintech entrepreneur. I understand technology. How is this system not 24/7? How is something like the euro dollar and the pound dollar, right? The most liquid markets in the world are not functioning as a 24/7 machine like the internet. And I wrote a paper in my blog post called The Good Dollar, which later on became also our nonprofit, which was we need a transparent money system where everybody can actually see all of the transactions. And because everybody will see all of the transactions, that will make the system more efficient and better for everyone. Then later on, I also talked about the fact that I think, and still do, that interest rates should eventually be negatively correlated to how much money you have, which means you should get less interest rates if you have $1 million, and actually much more interest rate if you only have $1,000, right? Because the poor should get more than the rich from the government generally. So I started writing it early on. Then in 2010, I saw Bitcoin and I immediately sort of was excited and passionate about the fact that it's unstoppable. I love the fact that it's unstoppable, that because of the fact it's decentralized, it's running 24/7, and anybody can open an account, anybody can transfer money into account. And as I grew as a fintech entrepreneur and constantly saw the challenges of connecting to banks, very, very archaic, by the way, APIs, like stuff from, as a computer scientist, you look at finance, traditional finance, most of the bank platforms out there are still written in COBOL with some code base from the 80s. Like it's
That's
truly archaic.
horrible.
The fact is that if you, by the way, understand blockchain, it's very easy to understand the following interesting fact. My grandfather started a bank in I think, the early 60s, before the computers were invented. And one day he told me about how the bank worked, because I'm like, wow, how do you actually manage a bank without computers, right? You actually have to have ledgers and somehow consolidate them. So every single account manager in the bank had their own clients and held a ledger of all of their clients. So you want to move something from a bank, you actually physically went there, say, I want to transfer money to this account. Somebody wrote it in pen and paper in a ledger. At the end of each day, the branches actually all took all of the account managers' ledgers, and some person consolidated all of these ledger into a branch ledger. And in that branch ledger was an accurate description of how much money needs to move between all of the branches and between all of the various banks. Then somebody with a motorcycle came and collected all of the branches' ledgers to consolidate it into the main bank's ledger, right? To actual book of records, right? And the reason we live in a world where transferring some assets like the concept of T+1, T+2, T+3, right, is because you needed to then say, okay, this is all the assets in the bank, this is all the internal transfers of the bank, but here are all of the external transfer in the bank. But then the motorcycle actually had to send them over to the other banks, which got them only a day later in the morning. So to actually consolidate what they got from the day before, you had to have this concept of T+1, T+2, T+3 for everything to consolidate, which is very, very similar, right? In Bitcoin, you need to wait, in theory, 6 transactions, right? To trust the transaction. It's how the blocks basically propagate between the network. The entire banking industry until today, and the entire financial industry, is still based on block equals 1 day, right? Since the 50s, 60s, block equals 1 day, and it takes time for the information to propagate. So because it takes time to receive that information, it was kept until today. We're in 2023, and still the majority of financial transactions in the world are T+1, T+2, T+3.
Wow. So basically, we're still kind of in this really old system. And what do you think it's going to take for them to, I guess, upgrade it and have this moving? Because I don't know if the stock market can necessarily handle 24/7 trading, because as you can see, there's a lot of bank stocks, for example, going down. First Republic, before JP Morgan acquired it, was halted 9 times in one day. How can they really control the volatility if it's beyond this 9 to 5 kind of trading that they have now?
I think it's shifting there. I think it's
I
inevitable.
believe so.
I think digital assets is inevitable. Just by the
Yes.
way, it's self-explanatory why it's inevitable. What's the alternative? I'm being invited constantly to talk in digital assets conferences. And then I joke on stage saying, what's the alternative? Analog assets? So moving from analog to digital is inevitable, right? So digital assets, blockchain assets, that's inevitable. Public ledgers, private ledgers, how that process happens takes time. It really reminds me always, like, I knew the internet was inevitable in 97, right? And every single thing on the internet got me excited. And I saw all of these companies, and it blew my mind, the potential, the opportunity. Then the dot-com bubble burst, and sort of everybody gave up on the internet. It won't happen. This new economy, what new economy? Eyeballs. Everybody sort of gave up on the internet. I think we're somewhere there a bit in crypto, with one big difference. A lot of people made a lot of money in crypto, so they're bigger believers than the dot-com bubble burst, and it's much more in the public domain than it was back in the 2000s. But eventually, blockchain assets, digital assets, inevitable. Assets have to be 24/7 transferable. Clearing and settlement needs to be real time. It could take seconds, like on Ethereum blockchain, but it definitely shouldn't take days. And transferring assets like currencies or bonds or stock or any assets over the internet should be digitally native. So I think that is 100% inevitable. And there's two parts of that process. There are digital assets that are not necessarily financial instruments, like your digital shoes or my kids' assets on Roblox.
Exactly.
So a lot of what will become NFTs. And there are digital assets like the stock markets, capital markets, which are also going to transform into digital assets inevitably. That part is going to take longer because it's a highly regulated space with a lot of protections, both on consumers and on companies. It's across border around the world, so that's going to take time. And there's the third part, which is what you mentioned, which is this Bitcoin, which is this digital gold, which is also inevitable because it has all the qualities of gold and it's on the internet. Is there a chance silver surpasses gold? Yes, there's a chance. Is there a chance that another crypto surpasses Bitcoin? Yes, there's a chance. But as time goes by, I think that chance actually diminishes over time, because I think Bitcoin is the king of crypto because it's unstoppable, because it's very, very hard to change it, and it's very, very hard therefore to break it, because again of its decentralized structure. And unstoppable technology is something that a lot of people find very hard to even understand. I've had so many people asking me, why aren't governments like shutting down crypto? Why aren't they shutting down Bitcoin? It goes against a government wants to keep their currency strong versus other currencies and manage their monetary financials and economics. I'm also a big fan of economics, and Bitcoin potentially hurts that, right? Bitcoin protects us consumers against inflation. But if a lot of people use Bitcoin to protect against inflation, it takes also away the power of the government to keep inflation at where they want to, and to keep a lot of things like capital controls. Again, people forget most people around the world live in countries that are not democracies, that don't have free markets, where currency sometimes could inflate. Double digits is simple. Sometimes it's even triple digits. The longevity of the fiat currency, the average duration of a currency is 30 years. That's the average duration of a country's fiat currency. The longest standing fiat currency is the pound. I think it's now 320 years, but it has devalued itself against silver by 99%. So again, inflation over time erodes the value of fiat money. And that's why people invest their money in the bond markets and the stock markets and real estate and other markets, because people who accumulate assets over time understand that fiat money is inflationary and its value diminishes over time. I think today we live in a world where by far we have the most people in the world now know and understand inflation in recent human history, period. And because of that, I think the value of digital gold, of Bitcoin, is important, and we'll gradually see the adoption of it. There's a question on how much of it will be purely retail consumers. Maybe at some point, central banks say, hey, you know what, we're buying this Bitcoin.
Oh, of course.
And that's a very different game. There's just not enough Bitcoin in the world for central banks to decide that they're buying Bitcoin. And then, by the way, that they are the largest holders of gold in the world today are central banks. And that controls a lot of the economics, inflation, mechanics, geopolitics in the world, is who holds the gold. So are we going to see that, or is this purely retail? There are a lot of questions. It's going to take time. But again, I'm a very big bull on Bitcoin.
As you should be. And I do think that definitely Bitcoin's going to have a role to play in countries' affairs. I was reading this article recently where someone from the Pentagon in the US said that Bitcoin might prevent war, where if a country's mining a lot of Bitcoin, then they might have more influence in the world, which I do believe could be something in the future. I think we're going to stray away from something like gold, because even that's a very controlled market where there's a lot of people that want to mine a lot of gold, where there's mountains of gold that would add up to large percentages of the current supply. But the governments don't allow them to mine it, because then the value of gold would just go down because the supply increases. Where Bitcoin, there's only going to be 21 million Bitcoin. It's a controlled inflation schedule every 4 years. Next year we have the halving, which I'm very excited about. How do you feel about this past bear market with Bitcoin? You've been through a few cycles now. How do you feel about Bitcoin and cryptocurrency now? How do you feel like we're going to be in the next year or two? Because I think we're seeing a lot of, I guess, catastrophic things happening with the banking system in general. We're really, right now, we're at a critical point.
So again, my view of the markets is you need to be patient and you need to sort of take a long-term approach. By the way, you could always trade in between. I'm also trading short-term things. I'm also, trading options, leverage trades, etc. But I do always take a very long-term position on assets that I invest in, because I think it's very hard to predict the markets in the medium term, right? You can trade the short term, you can expect the long term, but it's very hard to expect the medium term. I think that eventually my view on Bitcoin is there are only 500,000 people in the world who can own 42 Bitcoins. And 42 because it's the meaning of life from The Hitchhiker's Guide to the Galaxy, which is a very good sci-fi book. But also because it's easy to calculate that 500,000 people doesn't sound like a lot of people, especially if you think about the fact that there are 55 million millionaires in the world. So only 1% of dollar millionaires could ever have what is now roughly $1 million of crypto, right? And the smartest people I know are bullish on crypto and are bullish on Bitcoin. And these are the people who understand on an early age economics, the intersection between economics, finance, and technology, right? So people who understand finance, technology, and economics, I trust those people to basically accumulate wealth over time to reach that scarcity of Bitcoin, right? To eventually hodl more and more Bitcoin. So while we are seeing these sort of bear markets, which, by the way, super interesting, happens every 4 years, right? So I remember still the first crash, I think it was from $30 to $1. And then we launched Bitcoin on eToro in 2013.
Wow.
And we launched it a month when it went from, I think, 600 to 1,200 in a very short period of time, and then dropped all the way back to $150. And again, everybody told me, Bitcoin is going to die and nobody's going to use Bitcoin. And why did I drive everybody mad to actually launch Bitcoin on eToro? And that was the collapse of Mt. Gox, right? Then we saw later on, we saw ETH, we saw Bitcoin reaching, I think it was 21,000. We saw ETH reaching, I think it was 1,400, right? So this is the 2017-18 rally, roughly a 3-month rally. So very fast rally, very fast collapse, where the collapse really came from the ICO market and sort of the lack, I don't know if it's the lack of regulation or the lack of common sense, but just so many frauds, so many things that happened that retail consumers could sort of get burned from, and then eventually sort of collapsed that market. Then we saw over time new technologies, ICOs become IEOs, IEOs become IDOs, which fund the DAO, which is then more decentralized. Then another bull market came in, a much longer one, right? So we moved from like a month to 3 months to, I think it was almost a year,
Yeah.
right? So almost like 6 to 9 months of a bull market before we realized we're heading down. And then, we saw a business model that's unrelated, by the way, whatsoever to crypto, the crypto lenders business model, which eToro never took a part of, but basically trying to do sort of leveraged finance without regulation and controls, and again, some frauds and scams and problems in the market. And it sort of bakes leverage, right? So when you see prices, every time Mt. Gox price went to 1,200, it wasn't a real price. Mt. Gox eventually was like fake books and records, right? ICO market, the ICO entire market pumped, right? But it was so many pump and dump sort of, shit coins. It wasn't real value. It was like fake value, fake inflated value. But once everybody tried to translate that value into Bitcoin and Ethereum and others, it collapsed the entire market, right? And then the same happened in like half to 2021, right? So the markets in bubble, then they burst, then sanity comes back, then we go back into bubble. That's sort of that's the cycle, by the way, of the stock markets as well. And the history of the stock markets, and it's now history of crypto markets. What is it interesting in the crypto market so far? It happened every 4 years, the last 4 cycles, all related also to the halving, which is interestingly enough sort of predates rallies usually. So from that perspective, again, I'm bullish. I think we're going to eventually see more interest because, again, of the macroeconomic inflation soaring. We'll see more people hoarding Bitcoin, and Bitcoin basically pushes all of the rest. Regarding all of the rest, the way I view it is it's investable assets. I'm bullish. If you'd ask me on most, like 99.9% of crypto assets, I tell you I prefer to buy Apple stock before, if it's my first $100, right? If you'd ask me Apple versus Bitcoin, maybe 2-3 other crypto assets, but Apple versus Bitcoin, I'd buy Bitcoin. Apple versus all the rest, I think they're great companies with great value, and that's why our thesis is when you want to invest in the markets, you should look at crypto assets as another asset class, but don't sort of forget that there's still real value in real companies and in the stock markets, and try to find a place where you can do holistically both.
I agree. I do think that people should have the ability to diversify and pick what they want to invest in and look at all of the assets out there, which you're giving them the accessibility to do. What role do you think eToro is going to play in the future of digital finance? Because I think that you still have such a big and bright future here, because you are really one of the first and one of the most constant entrepreneurial ones, where you're just constantly adding new things. You even have an academy part, which I really love, the financial education part of eToro. I was looking at it before.
So we've always looked at our part, as I mentioned, since 2009, 10, when we looked at the emergence of the eToro social network, at helping people understand how to educate themselves about the markets and invest in the markets, and become more successful investors over time. And I think technology will always be a tool for that. And I think social network connectivity and learning from one another will always be a tool for that, and will continuously expand to more and more assets and crypto assets, right? So 2021, we were super excited about NFTs and Web3, and we launched in Delta the ability to track NFTs and to connect your EVM wallet, whether it's your ETH or other EVM wallets, into Delta to be able to manage your NFT portfolio. And we then looked at how do we expand into DeFi and launch a Web3 wallet. And then in 2022, the market suddenly shifted towards customers interested in interest rates and the bond markets and options trading, which represent an opportunity for investors to actually trade basically the rates, right? Because through basically puts and calls in the options market, you can actually generate strategies that capture interest rates. So I think we'll continuously add more products, and we'll continuously use technology and cutting edge technology to help our customers become more successful investors. I can tell you now, we're working on a lot of various projects through OpenAI. I'm super excited about the fact that suddenly you can, we have this actually a working prototype where I'm asking OpenAI to look at my eToro portfolio and then give me insights at what people similar to me would invest in to actually manage the risk of their portfolio. And I've been mind blown by actually the answers and the ability of us to easily use suddenly AI and the power of AI, which didn't exist, by the way, didn't exist 12 months ago, right? So it's about power, it's about powerful computing, new algorithms, and the fact that they're on the cloud, right? Which is why suddenly NVIDIA is worth $1 trillion, which were very, very hard to do just 12 months ago. So each of these cycles create new opportunities. These new opportunities provide eToro to build new technology and better technology to help our customers become more successful investors. And we'll continue to do that in the next 16 years as well.
Wow, using AI. That's innovative. I see again the ingenuity just constantly coming through with eToro. And I really respect that. I do love what you guys are doing, that you're trying to keep pushing for all different types of asset classes, giving people simplicity, accessibility, spreading financial adoption. I think your partnership with Twitter also spread a lot of crypto and financial adoption, that a lot of people are constantly talking about finance on Twitter now that they could just look up a ticker. And because of eToro, you can now just see the chart and what's going on with the markets as we're actually talking on Twitter Spaces about the markets. I think is really incredible. So thank you for joining me, Yoni. I really appreciate everything that you taught us today about yourself, about eToro, and your thoughts about the markets. Do you mind sharing where we could all find you and learn about eToro?
Sure. Well, eToro is very easy. It's eToro.com, or just download our mobile app, eToro. I mostly, as a Gen Wire, mostly on Twitter. So Twitter at Yoni Assia, YONIASSIA.
Awesome. Perfect. All of those links to Yoni's Twitter and eToro's website and their Twitter is also in the live chat and in the description. So make sure you guys follow them. Check it out. Have some fun. There's a lot of different countries that are enabled there, so you guys could definitely go check it out. Have fun. There's also some educational stuff that I thought was really awesome as well on stocks, trading, and cryptocurrency. So go check that out, eToro.com. Thank you again, Yoni. Thank you guys. I will see you guys again in an hour and 10 minutes for the Daily Zest at 12 p.m. Eastern. Don't miss it. Get your daily news. I got you. Thank you guys for coming. As you leave, make sure to smash these likes, subscribe, comment after this is over, and as always, stay zesty. Peace. Awesome.